with you on this Thursday afternoon. We are getting ready for a dump of snow. Boo. I tell you, it's terrible. Winter is over. It is springtime. And yes, before my cohort jumps in, Joshua, yes, I do know that it's the snowiest month of the year, but gosh darn it, I want some sunshine for the Easter Bunny. Yay.
Well, we will have sunshine for the Easter Bunny. On Sunday, it's going to be nice.
Good.
Friday and Saturday, not really.
Okay, I hear you. Well, thank you all for tuning in, listening to K4CO Radio. If you are wanting to jump on and see some beautiful faces, we have an interview here. You can go to Facebook at K4CO Radio, Instagram K4CO_radio, or go to our YouTube page or on LinkedIn. We're all over the place.
We are.
Streaming live, boys and girls, so get ready. So we have a lovely couple with us today. We have Michelle and Tim Oddo with the Oddo Group with Luminate Bank. Thank you guys for coming in.
Thank you
for having us. We're excited to be here.
Yeah, it's good to have you in. So, well, I want to start off by saying you guys are amazing. Just for what you do, that you are not only married, but you work together, which is absolutely fabulous. I think most couples can't do that. So
yeah, I think
props
most
to you
people
guys.
think it's a miracle, but we figured it out. It's been, we're going on 27 years here, 26 and a half. And I think we finally got it figured out.
Going strong still.
Yeah.
That is amazing. Yeah, 26 years in itself, let alone working with each other. So I'm speaking from personal, experience. So it's kind of.
You know that feeling, don't you?
I do. Yeah,
Yes.
I work with friends and loved ones, and it's sometimes you just need a quick walk outside to take a breath. But yeah,
Got to stay in your lane. That's a big part of it.
that is true.
Yeah.
Kind of know your boundaries. So, well, let's start. I'm curious because you guys have been together for quite a long time. How did you all originally meet?
Well, we kind of have a funny origin story. So I was in Denver, and I was originating loans in the mid 90s, and we were sending a lot. We were doing business with this bank out in Fort Lauderdale, out in Florida. So I was sending loans out there, and I was talking to my underwriter every day, and trying to sweet talk her a little bit to help with the loans and the whole process. And
Who was your underwriter?
it happened to be you. There's this really cute girl named Michelle, and now this was prior to all of the social media stuff, right? So we're not able to see each other on Facebook, or this is all pre-Facebook stuff. So I knew.
Even pre-Google.
So you just liked her voice at first.
I mean, basically, Josh, I was just infatuated with her voice and her smarts. I knew she was really, really smart. So her brain, she was highly motivated. She was really good at her
That was
job.
funny.
She was funny, all of it. I mean, she checked all the boxes. So I would send loans to her. And so anyway, yeah, we would talk every day. And so kind of developed this friendship and relationship. And that's kind of how it started. And then what happened, Michelle?
Well, that went on for probably a year plus, and we just talked all the time. We were good buddies. So we came out to Colorado, my team, and took the company that he was working for at the time to dinner. And we went to the Chop House, and I think right before I came out, I said, well, what do you look like? And he goes, some girls think I'm okay. And I'm like, oh, he's going to be so ugly. We'll just be good friends. We'll be good friends.
He's a dog.
Yeah. So get out here. We go to dinner, show up at the Chop House that night, got to the table, sat down, and just looked across the table, and we both said this, but it was like instant. I just was like, oh, I think I'm going to marry this guy.
Oh, wow.
So yeah, it was kind of like that. And then I went back home. We had a trade show, and the next day we went hiking. We were all from Florida, so we said, take us hiking, but we need like a fake hike. We can't do any elevation. So he took us to Red Rocks, where all people go,
geez.
right? And so that was our hike.
Kind of lame.
Yeah, but then, so anyways, went back to Florida, and then we stayed friends, and then we saw each other again, I think, in Vegas. That was our first kiss. And then we dated long distance some more, and then finally I came out, and rest is history.
So probably we did that thing for about a year or so, and then convinced her to move out here in May of '98, and we were married on New Year's Eve of '98. So 6 months later, we got married.
You know what? This is very serendipitous that I think that we're sitting here. So I love the Chop House. If you put a piece of meat in front of me, I'm hooked. And I was at the Chop House on January 1st, the day my son was born.
Oh, wow.
So
Wow.
we have like a little cool connection there
Yeah.
with Chop
Oh, we need to
House
all go to the
and-
Chop House together.
I agree. Special things have happened at the Chop House. That's amazing. So, and you both were doing mortgage lending underwriting beforehand.
Yeah, so I was an underwriter. So, well, I grew up, my dad was a mortgage broker. So that's how I got into mortgage. Right out of high school, I worked for my dad. I thought I will never do what he does for a living. This is just a job, it's just a gig, you know. But I found that I was really good at it and I liked it. So pretty soon I never got out. But Tim was actually, he was working directly with clients, helping them. He was a loan officer and I was approving the loans. So that's what we did, you know. But before I knew him, I did that. And
Yeah, so Michelle started doing mortgages with her dad in the late 80s, actually, so a long time
rates
ago.
were 18%.
Thank you for saying that.
Yeah.
I really,
So
thank
everyone
you.
out there, rates are very low right now.
Exactly. It is cyclical. So
Yeah.
no more
We
of
did
this. We're
12
going to wait.
No, we did 12% adjustable loans. That's what we did. I didn't even know there was a fixed loan at the time. But anyway, go ahead. Sorry.
Yeah, no, that's all right. And then I moved to Denver from Northern California in 1991 to be an appraiser because I thought, well, I'm going to have a legitimate career, not just be a salesperson. And so I came out here, and that was when Denver was kind of really taking off and, you know, coming out of the doldrums of the late 80s. So we were very busy. I did that for a few years, realized, wow, I do not like being a number cruncher, stuck behind a computer all day. So a few years later, I just went to work for one of the lenders that we did a bunch of appraisal work for. Didn't know how to spell mortgage at the time. Kind of learned from the ground up. Learned how to do it the old-fashioned way before there was really credit scores and all the stuff that we have today. So kind of learned probably the right way. Learned how to look at a file and you know, we kind of it was very fortuitous that we found each other, right?
I love it. I know for those of you that are watching on Facebook and other social media platforms, you can see their information. But those of you that are listening, you can go to Oddo Group, ODDOGROUP.com for more information, or go to nomonthlymortgage.com because you guys, yes, are partners and you also specialize in different things. So wanted to make sure that we mention that. So
Monthly mortgage payment, right? No. Oh.
okay. Like, I hope we have it right.
No, that's
Oh,
right.
Remember when
That's
I said
right.
stay in your lane? I was talking to me, actually. So go ahead.
No,
Sorry.
you're totally good. Well, you guys have seen a lot of changes from
Yeah.
the 80s and 90s. Thank you for mentioning how high the rates were. That's one of my biggest kind of pains in the side is when people say things like, the world is so tough. I'm like, really? Like, we've had a lot of stuff in this world. You know, we've had wars and the Great Depression, and then you guys were around for the 2008 scenario. We had COVID. You know, it's the world is always changing, and it's always, if you are looking for a home right now or looking to refinance, now is the time. Like, no ifs, ands, or buts. That's how I think of it. Get off your butt and go do it.
Yeah. People always say, they'll always ask, when's the right time to buy? I mean, that's a big question I get all the time. And I just say, the right time to buy is when you find a home you love and you can afford the payment. Because to try to time the market's really difficult. And Tim and I both, we've bought properties together and separate, you know, in 8% environments, 10%, 3%. And they've all been great investments because over time, right, real estate always appreciates. And so, you know, the right time is when it's right for you. You shouldn't jam yourself into a mortgage that you can't afford. Nobody wants that.
Right.
But we also, when you try to wait, like you said, let's wait for the rates to drop. Well, when rates drop, we know that with every 1% reduction in interest rate, 5 million more people are able to qualify for a home. And what happens when you have more people jump in the market and you have more competition, prices go up.
Right.
So you might save on rate, but now you've just paid a lot more for a home. We remember, 2 years ago, people were paying $50,000, $100,000 over asking price. And so you're always better off, even if your rate is higher than you want, you can always refinance.
Right.
But you can't undo the purchase price. So it is
Assuming
a good
you
time.
can get into it and you know you can make the payment, right? When the rates come down, they will refinance, right? Get it even into a better place.
Yeah.
For sure. I mean, I think the third home we bought, our third house we bought in '08, right before the major, you know, global financial crisis hit.
Right.
So initially we bought it with 20% down. So we were in a decent equity position. But then that that hit and our value went down. So I'm sure for a short period of time, either we didn't have much equity or almost none at all, but we stayed the course. We just kept making our payment. We had to live somewhere.
Right.
And we kept, and 3 years later, we'd climbed out of it and had a nice chunk of equity again, right?
Yeah.
Which is pretty true, especially in Colorado, where we have a good overall healthy market, appreciating market for the most part.
Go ahead.
No, I was just going to say, I've always found it fascinating where, you take, I don't know, $500,000 loan, a 0.5% is what, $100 difference? Something like that?
Yeah. Well, on 500,000, 0.5%. Yeah, it's going to be, gosh, I need my HP. Put me on the spot here, Josh. I mean, the thing is that the biggest thing about real estate that I think people kind of miss is it's the only asset, it's the only investment that you can actually, on a $500,000 home, good example, let's say you put 50,000 down, do a 10% down. Even if it appreciates 5%, that's $25,000. And you make the appreciation on the whole asset, the whole 500,000, not the 50,000 you put down.
Right.
So to your point, even if you pay a 0.5% higher than you wanted, that appreciation is going to offset anything greater than, stocks are good, but we saw what happened in the stock market in the last, they can go down really quick. At least real estate's a slower, more gradual up or down. But you still have your asset. Like Tim said, when it dropped in 2008, we still had our house. We have to live somewhere.
Right.
So, and we know that rents are not, you're locking in a payment, whereas rents, you can't control that.
For sure.
So,
Yeah, and I think that right. Your point, Josh, is when you have this real estate, you're leveraging this bigger asset that's growing. I mean, real estate still is one of the best ways to build wealth for anyone, in America, and it's a great opportunity. And it's better than throwing money down a hole called rent. And and over the long term, you're going to come out well, and it'll end up probably being one of your best money making. Building wealth kind of ventures you can do.
Right. I know we had talked about rates. When you first got into this, it was closer to 12%. I'm curious over the decades, what are some things that stand out to you that have really changed, that have made a big difference in your industry?
I mean, guidelines, of course, because 2008, right before, again, being an underwriter, and we underwrote Tim and I both did a lot of what used to be called subprime. Now it's called non-QM. It's a little bit calmer than it used to be. But we saw it get out of control, and that's what happened was when Fannie Mae and Freddie Mac started using credit scores and they started taking loans that used to be called, would have been a true subprime loan with a much higher rate, much stricter guidelines than even Fannie Mae came in. So we kind of saw it get away from itself. At one point, loans, we could do 100% loan, or even 125% of the equity with a 580 credit score, a drive-by appraisal, a verbal employment. That was crazy. That just was not good.
Stated income.
Exactly.
Nina, no income, no asset.
Right.
Yeah, I make $50,000 a month in my garage building bicycles. Okay.
Yeah.
So,
and it got out of control. I mean, essentially, you're giving a whole section of the population a loan that really were renters, right? And they should have remained renters until they got themselves in a position where they were ready to be a homeowner. And so, we reaped the whirlwind across the board. Right. And we knew that too. It's like
we could feel it at the time. We could see it.
These loans don't make sense. They didn't make sense to us either.
Right.
Yeah.
Now, I mean, I think that you went from that, but the pendulum has definitely swung though, Sarah, where, you didn't need any, you could fog a mirror. If you could fog a mirror, you could get the loan, right? And half of those people didn't deserve it. They shouldn't have. But to now, where you can't give somebody who has 30 or 40% down, but is self-employed and writes all their income off, that's a harder loan today, right?
Right.
That's still, if you put 40% down and you have great credit, you're probably good. So there's a fine line, and there's new programs coming out now more recently where they're trying to find a happy medium, and because should you be doing those loans with no money down? No, but if you're going to put 30 or 40% down, that's probably a worthwhile investment.
But right after '08, right after that mortgage meltdown, right? That's what we call it, the mortgage meltdown. Then the pendulum swung way the other way.
Right.
So then you had to put 20% down. Everything was full income documentation. We're not allowed to talk to the appraisers anymore. That's a big change. We used to be able to call the appraiser and say, what do you think? You know, before we ordered the appraisal on a refinance, will it value? Not that we're doing anything wrong. We just didn't want to spend money for the client if we didn't know. But we can't do that anymore. We have to order the appraisal through a third-party service. We have to work through a portal. We're not allowed to pick the appraiser. It's always random rotation. Those are all laws that came out after '08. So it swung way the other way. And now I think we're really in a good spot. Like, I feel like things make sense right now. Yes, you have to document your income. Yes, you have to have a little bit more money down. But if you're a first-time buyer and you have really good income and good credit, you can do 3% down. And that's a good thing. As long as you've got reserves and your income and your credit are good, you should deserve to do that. Or to Tim's point, if you're self-employed and you do write all your income off, and you don't qualify for a traditional loan, but you have a decent down payment, there are other options. We can use bank statements and average your deposits, or we can use a 1099 a loan and do a percentage of that. But the difference is from '08 or right around that time is you have to have certain credit scores and you have to have money in the bank and you have to have reserves. And so there's more things that we need today to make sure that loans are still sound. We don't want to have a bunch of crazy loans out there.
Right. It's nice to know. I know right away. I mean, the pendulum just went completely on the other end. I was in banking actually during the 2008 crisis and stayed in banking for quite a while, stayed in finance. And I remember one family, they had about $2.5 million with us, wanted to buy a $500,000 house, couldn't get a mortgage at all.
Yeah.
Couldn't because they didn't have the income
Right.
with them. So it's like we, had to move over all their assets, all this stuff, $2.5–3 million, and we couldn't approve them for a $500,000 house.
Right. Even though they had the assets
They're
to
like,
pay
we could
cash
buy this
for it.
5
Exactly.
times.
Exactly.
Yeah.
Right.
So we do have
That's where they kind of lost their mind, right?
Yeah.
Like they're like, find the happy medium. Let's do common sense underwriting, common sense guidelines to get the people into the homes that deserve it, right? I mean, we want to put everybody in a home. But it has to
make sense.
It has to make sense.
Yeah.
Right.
Yeah. So it's nice to know that it's kind of swinging back.
Yeah.
It's been swinging back.
It has.
And we
been.
have some really good, to your point, asset dissipation loans. So we can use assets. So this is really great for financial advisors that have clients who have money under management. They don't have to take that money out. We can use the asset like income without them actually creating a draw. So if they don't want that, if they don't want to pull more money out to qualify, they don't have to necessarily, as long as the asset's big enough. There's a formula for that. So there's a lot of
So
different
to your
ways.
point, you can take that $2.5 million
Yeah.
and divide it by this formula and say, okay,
Depending
we
on
can
the program.
we can give you credit for this much money of income per month, right? Because in
Right.
theory, you could liquidate that and pay yourself an income. So we can get stuff right. Like that's what they should have been doing all along.
We could bore you to tears with all kinds of loan programs. You want to hear about them all?
No, I do find it fascinating. Well, to Josh's point, he and I both met in the finance world 21 years ago. And then I went into private banking and into the mortgages in California in 2007, 2008. So I was there for the mess. And I haven't known anything post 2008 because I haven't.
Weren't you doing the cozies? Were you doing the neg-am loans?
I was
you told me?
doing, yes, I was
Yeah.
definitely doing subprime and stated income.
Yeah.
And
All those things.
it didn't feel right.
Yeah.
I remember
Yeah.
feeling like
That's how we were.
this just feels a little squirmish. It does. You know when it feels wrong.
Right.
I didn't know about the appraisal piece of it, that now that's a third party.
Yeah.
And I know it's so interesting because I mean, in 2008 and post, I understand kind of the fear and oh my gosh, now the banks are owning all these houses and they're like, this isn't the business that we're in. Now we have to put a total kibosh. But then it really screwed people who actually could afford it. And
Right.
so I'm glad it's starting to normalize a little bit back out to make it fair.
Another thing that changed is we used to do these loans called 228s. You probably remember. So they were fixed for 2 years and then they became an adjustable. But they usually had a 3 or 4 year prepayment penalty. And then on the third year, it would adjust like 5%. So here's somebody in this loan at a certain rate. On the third year, it goes up 5%, but they have a huge prepayment penalty, so they can't refinance it. And a lot of these people didn't qualify anyway to refinance.
Right.
So it just was a hot mess. It never should have. It got way out of control, and unfortunately, we were in. But thankfully, we made it through that. Tim and I both have been in the industry for a long time, almost 30 years, 20 some years. So we've seen it all, right? But we've made it through, and I think that's because we've always tried to do things the right way.
No,
and even during that time, like even though those loans existed, we wouldn't do something that was crazy. We would try to make sure that it made like, how are you going to make this payment? Like, I needed to understand that this is going to be okay for you.
Right.
So we really did try to, as much as we could regulate it, do that, and even in those times.
I love that you all counsel. It sounds like when people are calling you, because I am kind of curious what the loan process is. You had mentioned you have a lot of loans, which is great. It means you can really kind of custom fit to whatever is going on in their world, because there's so many things that we don't know until you start having this relationship. It's what actually drew me to you, Michelle, is you went through the whole process in a group that we're a part of. And I'm like, you have so many touch points with these people, like at the beginning, through, end, and then into the future, which is really important. That aspect of we're really here for you and you want to succeed. So on kind of what is the normal process? And I'm curious how long an average, I know that's kind of hard to say, but for an average normal loan, what does that process look like? What is the time frame?
Well, just to differentiate, Tim and I do different things. He only does reverse mortgages, and you'll probably talk more about that in a minute, right? Yep. I only do forward, regular mortgages. So in my world, an average loan takes about 30 days. It can go quicker. I mean, sometimes we have people purchasing a home and we can close in 2 weeks or 10 days if it's an emergency or we need to, if that helps them win the deal. We can get it done. But 30 days is comfortable. That's probably the more norm. And the process is that I always like to start with a conversation, because you just said it, like, advising is more important. We're not here to sell. We're not here to jam anybody into anything they shouldn't or don't want to do. We're here to advise. We've been doing it forever. We do understand the good and the bad, and sometimes clients come to us and they have a certain idea of what they want. And after talking with them, I'm like, okay, I know that's what you're thinking, but here's what I'm thinking. Let's talk about a few options, give you some ideas. If it were me, this is what I'm thinking. But at the end of the day, it's their choice, obviously. But just to try to go through that conversation initially. And then they'll fill out an online application. It usually takes about 10 minutes. We'll do an approval within 24 to 48 hours, get their documents. My team is really big on, we pre-underwrite everything. The prior underwriter in me, like, I don't want any mistakes down the road. We don't like that. No surprises. So we get everything up front. I fully underwrite the file. We make sure, I don't have loans go to underwriting and fall apart ever. Like, that's just not a thing. So we make sure we do all that up front. And then we can talk about marketing touch points later, but his process for reverse is a little different.
I mean, I would say that, for both of us, right, what we try to bring to the table is we want to have a conversation, right? Mm-hmm. First and foremost, we're not sending somebody, hey, fill out all this stuff and do all these things and give us all this information. That's overwhelming to people. They don't want that. Right. I want to get on the phone call. I had one of my friends send me this gentleman in Loveland this afternoon. Literally, I was almost late getting here because I was talking to this guy and we just kept talking. Joe. And so I call up Joe, and he's 81 years old, and he qualifies for a reverse mortgage, going away, no problem. And he's like, well, maybe I should downsize. Maybe I should stay here. So we're going through all these different scenarios. I'm like, Joe, you can do any of these. You qualify, But at the end of the day, he's just still not sure what he wants to do. He maybe want to go do a home, a multi-generational thing with his daughter and son-in-law. So I'm like, Joe, you know what? I don't think you're not ready to do a loan right now. I want you to think about this and talk to your daughter. You got to work through all this. Okay. Now, if you decide, hey, this is the home I want to be in for the next 5 years, great. I'm your guy. I want to help you, and we'll do it, right? Mm-hmm. So, but I think so much of the loan process is, does this make sense? Mm-hmm. Do you want to be there? Is this really a long-term, especially with the reverse? You want to be in that home for a few years at least to make it make sense, honestly. Right. This is not a short-term. This is not a bridge loan. This is not a short-term loan. Mm-hmm. And so Michelle and I, she taught me this. One of her original bosses would always say, and the point of the loan is, and the point of the loan is, like, make it make sense. Like, you can't sell this and do a good loan if you can't even make it make sense to you, right? I think that's kind of been a driving theme in our business for 25 years.
Yeah, and it's a great question to ask. Like, what are your plans? Do you want to stay in the home? Does it make sense to pay points and buy the rate down, or does it make sense to do an arm, or just depending on their situation. And sometimes I think of things, they want to put more money down, but they have all this debt. It's like, no. I think it makes more sense to pay off this high interest rate debt, put less money down, because like you were saying earlier, Josh, like it makes more sense to put a lot more of your mortgage or your debt at 7% or 6.5% and get rid of that credit card debt. So just helping people think of new strategies. And we also can help people buy a home without selling their home first. And that's a really big deal in Colorado, especially because people are so afraid to list their home and then they can't find the home they want and they don't want to be homeless, obviously. So that's stressful to people. So we have a lot of programs where we can help them purchase before they sell, through some unique things that we can do where we can access equity in their home to help them do that, or we have a cash purchase program. So anyway, just understanding what people want really helps drive the direction of the process once we have those conversations.
And I'd actually really like to get back to Tim, you do reverse mortgages.
Yes.
And reverse mortgages for a long time, there's so many different myths or people don't understand them. I mean, everything from the bank takes your home, the family will be responsible for the loan, it'll drain your equity. There's so many things out there where for a while there, reverse mortgages, it was like, oh my gosh, this is like the biggest scam out there, to be honest. And so talking with you a little bit, one, a lot has changed, and two, people are just not educated about it.
Yeah, you nailed it. And you nailed some of the big misconceptions, right? I mean, a reverse mortgage is the loan everybody loves to hate, right?
Right, exactly.
They do. I mean, 70% of the people realistically think this is a scam. You're going to take mom's home when mom passes away, the bank gets home, which is totally not true and hasn't been true since the late 80s. You're going to use up all of mom's equity. Again, not true, because we're lending to a lower, more conservative loan to value. Reverse mortgage at its core is really a financial planning tool, right? And if people really understood that, if they were educated, I'd literally be the busiest guy in town, because there's millions and millions of baby boomers all over the country that have good equity. But to me, Josh, if you're 70 years old and you have a lot of equity and you plan on living in the home for the rest of your life, but you're still making a mortgage payment, why? Why wouldn't you look at doing a reverse to eliminate your monthly mortgage payment, give you a little bit more flexibility, right? And just let you live out your life and have more financial security and freedom. I'll give you a quick story. So I talked to a woman last night, and I'm on the phone with her son and daughter. Now I do that, her son and daughter-in-law. I do this a lot because I want the family to be involved, right? Because we want to make sure they feel mom's being protected. That's a big deal in my world.
Huge.
Right? It's huge. Like, if your mom's going to do it, I want you to be at the meeting.
Right.
So this poor lady is living in a home. Her monthly mortgage payment is $1,200 a month. Her Social Security is literally $1,200 a month. So, and then she gets, the only other income is $1,500 a month from her renter living in the basement. So if that renter leaves, if anything happens, which could happen tomorrow, she literally can't afford to live there because her payment is the same as her, she can't eat, she can't pay her heat.
Have heat, right?
It's like when you hear these stories, you're like, but yet she's got great equity in the home. She got plenty of room. She could do the reverse. She could live there rent free because there's no monthly mortgage payment. This would be, I'd feel like I doubled her Social Security, right? I mean, it would be a game changer. So you hear these stories, you're like, oh my gosh, like this is, if you want to live there for the rest of your life,
or even a long time, people feel guilty about accessing their money in their house, and I tell them, I say, listen, that's your savings account shaped like a house. You've worked your whole life to put money into that. You should be allowed to take that money out. That's your money. You've earned it, And they're like, well, they feel guilty. It's like, don't feel guilty. It's still a savings account. It's just shaped like a house. You've put your money in there. You're allowed to get it, And Tim's got hundreds of testimonial videos on YouTube of people where he's really literally saved their life, and they're really moving, and it's a big deal, and he's really passionate about it.
Well, and the thing is too, is that, right, I mean, we're really only lending to 40 or 50% loan to value on average. Okay, so we're not lending to 80%, 90% of the value of the
On
home.
the reverses.
On the reverse.
Yeah.
On the reverse.
Right.
So the reality of it is even if we're lending them 50% of the value of their home with just normal appreciation rates on the average, they're probably going to maintain a pretty decent buffer there and probably still have a big chunk of equity for their heirs at the end, right, when they pass away or they have to leave the home 10 or 15 years down the road. So it's way better. And if people really understood it, they would, there would be a lot more interest.
It'd be utilized a lot more.
Oh, I mean, it's the most underutilized, underappreciated loan program in the mortgage world, period, bar none.
Why do you think that is? Is it just the education piece of it?
Well, I mean, it's that's the $1 million question. I mean, there's been some things. Today's reverse mortgage is not what it was even 10 years ago. So we've made some changes. Like, for instance, in 2013, they've added a bunch of components to the program to protect non-borrowing spouses, right? So, for instance, in the old days, if I was 65 and my wife was 55, can't be on the loan because you have to be at least 62 or older to be on a reverse mortgage. So in the old days, if I had done that loan and then 5 years later I passed away suddenly, she wasn't on the loan. So now the bank comes and goes, hey, you either have to pay that off or sell your home. So now the wife goes, we did a reverse mortgage and I'm getting kicked out of my home. Right. So there's been things where HUD, it's a government insured, it's an FHA insured loan. They've had to do stuff, and they've made some good changes in the last 10 years to protect the non-borrowing spouse. To make sure people are qualified that they still have to pay their property taxes and homeowners insurance. Right. We don't want to do a loan where people literally, can't afford the bare necessities. Although a reverse mortgage should give people more monthly cash flow. Just in its very nature, right? Because we're eliminating their monthly payment. And
I was going to say it's a lot more lenient on credit because it really is based on the assets. So if somebody maybe has a little bit of rough credit, they could still get a reverse mortgage. And their income doesn't have to qualify like it does with a regular loan. It's more about the disposable income. So they just have to have a certain amount of disposable. So it's really if they have the equity, most people, it's a huge lifesaver for them.
Awesome.
Even if they couldn't qualify for a regular mortgage.
Thank you. I wanted just to mention your information again. For those of you just jumping on, thank you for tuning in to K4CO Radio. We have Michelle and Tim Oddo with the Oddo Group with Luminate Bank. If you want more information, you can go to oddogroup.com or nomonthlymortgage.com for their information. And there's so much good information on there because we were talking about education, so I wanted to make sure I did that. What's hitting me is you guys, and I wanted to get into your values, but uncovering all of this in conversations, you're really discovering what the values are of your clients. Is to say, do you really want to retire in 5 years? What is your goal in 10 years? How do you want to leave this to your family? And I think to hit on those value points are really crucial in saying, you know what, this is what is going to make sense for you. Mm-hmm. So I appreciate as a homeowner and just as a human being that there are those relationships are important to you all, because that conversation I think a lot of times is missed, and the education being in that world in both sides is greatly missed. I remember used to doing the paperwork of here's your mortgage and going through it in about 6 minutes. And there's a lot of information in there. So looking back, I'm like, well, that was their biggest asset purchase of their entire life. It's maybe important to know what is written down before you sign. So I just wanted to say thank you for taking the time to have those conversations with people.
To that point, real quick, a quick interesting side note about a reverse. It's required that they get a third-party counseling session done. So they want to protect the homeowner, the senior homeowner, to make sure they understand, because not everybody, and they could have their family members there and all that kind of thing, but they do want to protect mom and dad. They want to make sure they understand what they're getting into.
Make sure they're of sound mind. That's a big deal.
Right, because it is. I mean, it's a loan for seniors in their retirement years. Yeah. Now, to that end, I've personally had the privilege of doing a reverse mortgage for my mom and my dad, both on separate properties. So, I'm not just, to your point about planning, like, to my dad, not as big of a deal, although it's been really important. He's done a reverse mortgage on 2 different homes, one here in Denver and one in Iowa where he lives now with next to my brother. But for my mom, it really saved her, because in October of 2019, we're right before we knew the whole world was going to melt down with COVID. She's struggling, making a payment. She's working part-time to make ends meet. We do a reverse mortgage. We eliminate $1,000 a month payment. Now she's living there, rent-free, no payments, no monthly payments. And when COVID hit, she got scared and she didn't want to work. Well, because she had the reverse in place and because she didn't have a monthly payment, she was able to basically quit work and live. She's not rich, but she can live on her Social Security, and it was a game changer.
Right.
So it matters for people's, and it was a great financial investment, right?
And I like that third-party counselor thing. In fact, I think that should be for any mortgage. I mean, that's like one of the biggest decisions, we make. So
that's a good point.
I really like
Probably
that.
should. Yeah.
Well, I know we've hit on a lot of amazing stuff, and there are other lenders out there. What makes you stand out to be a little more unique and, of course, better than the rest?
Gosh, so many things. No, thank you. Where do we
First of all, her
start?
name is Oddo. I mean, that's
Oddo.
just awesome. I love that.
Yeah, thank you. My handle,
Same backwards or forwards.
yeah,
It's a
it says
palindrome.
palindrome.
Oh, yes.
Right? Oddo.
Ooh.
Got my Instagram handle's Odomatic. That's fun.
Love that.
No, I would say a couple things. For one, obviously, underwriting background, 30 years in the industry. We're not here to sell. We're here to advise, create a perfect strategy. And you said it before, there's a lot of touch points. We're very process oriented in terms of I've dialed the process in over the years to a place where we really are with that client all through the process and then after, well beyond. I have clients from 10 years ago, 15 years ago, I'll end up working with their family, their friends, at their family reunions, because we're there through the whole thing and it's a relationship. And also just our office culture is so cool. And because that comes from the top down, we really try to pour into our people. We do a lot of fun things as a team. Most of our employees have been with us either 5 years, 8 years. One of our employees was with us 22 years. She just retired. I tried to retire with her, but I couldn't do it. No, I'm just kidding.
I wouldn't let her.
Yeah. But no, she, so we really try to make sure that our employees are like family and that we love on them and do some fun things. We do charity, do a lot of things together so that they can give that to the client, right? They feel it and they want to give that same love to the client. So I think that's one of the things that makes us a little unique. Obviously, working together, but doing separate, we have separate client base, but we still make our decisions together and we just have fun in our office. Tim's kind of the fun guy in the office. I'm probably a little more serious at work. I get a little I'm really, but no, we definitely have, we have a fun group and then just our experience. Tim was an appraiser. I was all those things matter. We're not just slinging a loan together against the wall and seeing what happens. We really know. And the other thing is our company, yes, we are the Oddo Group, but we're under Luminate Bank. Luminate Bank is based out of Minnesota. And that bank is backs us up. We underwrite everything in-house. We fund our own loans. We have a really high yield savings account for clients that can earn 4% and make money to offset that other 0.5%, on their payment. But so things like that we really have so many unique tools, and we have, FHA, VA, conventional, jumbo, reverse mortgage, lots of non-QM, bank statement loan. We just have so many. We're like Swiss Army knife. We've got all the loans, but mainly we care. We've got the heart. We've got the culture, and I think we've got the experience.
And at the base of that all, I mean, listen, it is this business is all about relationships, right? I mean, all of life is all about relationships, really.
Yeah.
And we've been very blessed to be doing loan stuff for over 20 years, and we've had so many great experiences, but we have so many great clients. I mean, we care about our clients. We do. And especially doing reverses. I mean, you kind of fall in love with all your clients because I get to work. I feel like I'm the
He
luckiest
gets a
guy in
lot
the
of
world.
hugs from senior
If I don't get a
women.
hug at the closing, I'm like, come on. Right? No, but I want
and
my
cookies and
yeah, a lot of stuff. But I will tell you, I mean, it's important. The relationship piece is important, and they need to know that they can come back because there is scary things, or people will send them bogus stuff because we get junk mail and deeds are recorded, or public records. So you get
Right.
this stuff. And I encourage, I want you to call me and ask me, because most of it's garbage.
Right.
And I'm going to tell you, hey, don't do that. You don't need it. And so we want that ongoing relationship, because we do want to be their banker for life, and because, we know that, that other stuff, other good things will come out of it, but more than anything, we want them to be secure and feel safe that, like, hey, we got you. And, even though we're not servicing the loan, right? I mean, the loan will be serviced by another big, lender.
Eventually.
Eventually.
They get loans
Eventually.
get sold to servicers.
But in the meantime, we, regardless, we want to be there to answer because we can answer 95% of their questions anyway.
For sure.
Forever. And honestly, a lot of clients right now are getting a lot of things in the mail saying it's the right time to refinance. Rates have come down. They've come down some. And for some people that might make sense. But a lot of my clients, I mean, I get calls every day. Michelle, should I do this? Should I do? And they know that they can come back and we're going to be truthful with them. And believe me, if oh yeah, you should do a loan. Let's do it right now. No, that's not what we want to do. If it's not going to make sense for you, we don't want to do the loan. But I want to be there when it does make sense, and I'll be the person to tell you. And you asked about those touch points. I send out a video every week to my clients, informational videos about what things are going on. Most of my clients are on social media with me, believe it or not, for many years. We do a lot of client events. So we're really, listen, if you do a loan with us, you're stuck with us. That's just the way it works. You're with us for life. So, and we really, that's important to us too.
I think that's important to a lot of people, especially these days. What I've seen over the past years is people want a sense of connection, community again, because with the technology, with everything like there, it's been lost. Yeah. And so I've always said you do business with people, you don't do business with a company, because in a company, if a person is bad, they're not going to tell their friends, right? If they didn't get the service that they wanted. So,
right. And no, I think you're right, Josh. And to that point, it's like people, I mean, just yesterday, I talked to this woman a year and a half ago. She just wasn't comfortable. We could have done the loan. She just wasn't comfortable. Out of the blue yesterday, I get a text from her daughter, who, of course, she was part of all the stuff. And I had her in my phone that, I was like, oh, okay, good. I kept her information. She's like, do you remember us, me and my mom? And I'm like, yeah, of course. Would you mind talking to us again about, she's ready to finally do the reverse mortgage. I'm like, yeah, of course. Yeah, that's what I do. Yes, I would love to talk to you guys. So we're going to get together on Monday and go through this. Now the rates are actually better than they were in November of 2023. She could have
refinanced had she done
yeah,
it.
that's true. She could have, but
she could have had no mortgage payment all this time.
Yeah, but the nice thing is she came back. Yeah, her daughter's there, right? Like, we want to maintain those channels. Like, hey, call me.
Yeah.
We're here and we want to help.
Right, exactly.
If it makes sense.
Stay top of mind.
Yeah. Right.
I'm curious, you've talked about your staff and how you guys are like family. I'm curious how big of staff that you have.
Well, like in our branch here in Colorado, just for our teams, we have, so Tim and I would each be like a separate team, right? So we have one processor that we share. We have an LOA, which is a loan officer assistant. Her name is Diamond, and she's a gem. We just love her.
Oh, was that said purposefully?
No, well, it kind of rolled
Diamond
right
is
off
a
the
gem.
tongue. I mean, she really
she
is.
never practiced that ever.
Ever. I've actually never
Yeah.
said that. But she's really amazing. We love her. And then we have our opener. So we have 3. But then, of course, the extended would be like back in Minnesota, our underwriting and our closers. But it's like they're here. There's something about the Midwest people. They're just so, our teams, our company is the most, what can we do for you? Yes, we're here for you. Everything's about the client always. So we have so much resource behind us, backing us, but just our team local would be those 3, and then the 2 of us. And then we have a couple of other loan officers in our branch as well that work under our team, under our branch. But so small but mighty.
I love it. And because you guys do, of course, the mortgage and loan piece of it, do you have referral partners, kind of trusted advisors? So when people call and say, hey, I need a broker, or I need, I don't know, my
Well,
concrete fixed.
Yeah.
A
Electricians,
garage
heating,
person,
air conditioning,
exactly.
roofing, like,
Yeah.
siding, everything.
Of
Yeah.
course, we've got our people that, we trust and we would absolutely refer out to. And then we are that to them. So it's reciprocal. And, I know Tim is this way. Tim would always rather work with a referral or someone that we know versus, or local. He's really big on that. I mean, we both are, but Tim really will go out of his way to find somebody local versus, Googling some big, franchise or some conglomerate or whatever. So
I,
we
I
definitely,
like the little guy, I like the small business owner, and
Yeah.
they're the best, right? And they're
Yes.
hustling, they're working hard, and they want to do
Yeah.
right by you. And but I think traditionally, Sarah, the referral partners, for most loan officers, most mortgage people is going to be
coming into us versus who we
coming
were.
into us
Yeah.
would be realtor number one, right? For Michelle especially, realtor, financial planners are really big for me, but also for Michelle, CPAs, attorneys, divorce attorneys, estate attorneys, that kind of thing, right? Anybody that's working with our clientele. Interestingly enough, realtors, you can do a reverse mortgage for purchase since 2009. So you can use money, and you can put money down to buy a home. So basically, an 80-year-old borrower can buy, if he goes to buy a $400,000 townhome, he'd have to put approximately $200,000 down. So that's his cash investment. That's his down payment. He would finance the other $200,000 in a reverse mortgage with no monthly mortgage payment. So you could put $200,000 down, buy a $400,000 home, and live there with no monthly payments. It's pretty slick. And what the advantage of that is you can keep money, right? You can enhance your savings. So instead of putting all $400,000 down, now you can keep $200,000 to invest or put
in
under
an
your pillow.
annuity or whatever.
Right.
And a lot of what's been a really unique thing, I think, in the last, 5 years, especially in Colorado, is we've seen a lot of grandparents wanting to come here to be with their kids and their grandkids, especially right after COVID. So what's interesting is they might sell a home in a much lower price point market, but the home was free and clear. So now they've got 400,000 to work with or 500,000. Well, if you come to Colorado, what can you buy? Especially if you had a big, beautiful home in Kansas, and now you're coming to Colorado.
Right.
So what's kind of cool is they might sell a home there for 500,000 cash, come here with that money, but then, maybe put 4 of it down and get an $800,000 house that's equivalent to what they had, or put 3 down, put the rest in savings, put it in annuity. So that's a really cool feature of that reverse mortgage. But as far as like our partners and our referral partners, we both have referral partners we've had for years, but we always are looking for new people, but we're also really big on working with people we like. And if you're not aligned with us and you don't have the same goals, if you don't think about the client the way we do, that's a hard fit. I know way back in the day, like I want to say it was around, it was probably right around 2009, I had an epiphany. Like I had this one realtor that was just awful. Like every time the phone would ring, I would just like get hives, he's just really brutal. And I thought to myself, I don't have to do that. I'm going to work with people I like that are good to the clients, that are good. We're friends, we're a good fit. So we're always looking for good partners that feel the same way that we do, which is we want to advise, we want to always do the right thing. That's the most important thing. And have fun. We want to have fun doing it. So,
Yeah.
Well, I know that we totally echo that sentiment. I mean, we work with people that we like, that our values align. And when I connect people, that's exactly what I'm thinking about. I'm like, how do they represent themselves, not only in their business? Because I mean, Colorado has roughly 700,000 small to medium-sized businesses. We are the backbone of this state. And it is, like I said, how you represent yourself, but it's in public. And what are you doing in the community? That stands out to me as well. Because, if you're going to not do good by the client or the customer, I'm not going to do business with you. It's kind of plain and simple.
yeah. And then it's a one and done. And we're not about that. We're about the relationship and the referral business and the repeat business. And all those things matter to us.
And I think that is bore out over the last few years, because 2008 and 2009 was tough, right, for everybody. And you guys were there at that time. that was paled in comparison to what we've gone through the last few years. So the last 3 years have been really tough. And I don't think if your values and your commitment to doing the right thing and your commitment to working to help people, it's been said that we've lost 50% of our loan originators in Colorado over the last couple of years. Literally 50% didn't renew their license. So, which is okay with us because,
More is coming to you.
yeah, probably, right?
I mean, there's less out there too. A few
yeah.
years ago, when rates were 2% and 3%, you didn't have to really do a good job. We still did, but there were plenty of people that just loans were being thrown at you and you whatever. So what's happened is when rates go from 3 to 8% all in 1 year, that's like a water faucet just shut off. And so many lenders couldn't make it. They closed. There were a lot of mergers and acquisitions. A lot of people got out of the business. But thankfully, we have such a strong base of referral partners and clients, huge database of clients that carried us through that. And we were able to, we didn't thrive maybe 2 years ago, but we survived and we survived well. And now it's really fun to see that it's a busy time. Colorado's busy. This has been a busy spring. It started early in February. For people who are wondering how the market is, it's strong. I'm seeing lots of competing offers, even some over asking again. Not crazy like before, but it's just
but for the right properties.
Certain pockets. I was going to say certain pockets. There's certain areas, right? Highlands, Cherry Creek, Wash Park. I mean, there's certain areas that will always demand, but we have a strong market in Colorado. And you said this earlier. You said we're one of the areas, not every state maybe could make it through certain time periods, but Colorado is cool because we have industries of all types. We're not just oil. We're not just tourism. We're not just tech. We're everything. And so we have a strong market here for those reasons as well.
And people want to live here, right? I mean, it's a lifestyle,
And it's
it's a
beautiful.
lifestyle thing.
Yeah.
Most people are
keep coming.
transplants and they
Oh
keep
yeah,
coming.
Josh
But-
and I are natives, and they just keep pouring in.
Yeah. Sorry, guys. Sorry.
It's okay.
I think,
California, Floridian.
yeah. I've been here over 30 years, so
Yeah,
maybe
we
semi.
we hear that a lot, and the answer is no.
No.
You don't get the status. I'm sorry.
I'm getting a thumbs down. Huh?
For native, no.
Okay.
No,
All right.
I
All right.
gave a
That's
thumbs
fair.
down to someone who said, "Well, I was a month old." I go, "You're really close, but no,
Boy,
I'm tough."
She's pretty tough.
Yeah,
She's tough.
we're not getting many thumbs up in this crew. No.
Not with natives.
No, not
Just
with
with the word. Just
Yes,
with the word,
just
native.
with the
Yeah,
native. That's
exactly. Especially in Colorado, since it's amazing to me rent because, of course, many years ago, I've been here my whole life. When I was, going to college, I could easily afford renting something. Now you might as well buy
It's
a
a
house
mortgage
because it's a
payment.
mortgage
It
payment.
is.
It is.
Completely.
Yeah.
Yeah.
You might as well build some equity.
Exactly.
Yeah.
Exactly.
Yeah, and it used to be you could buy for what you rent. It is a little bit more expensive now, but it's yours, and you're
Right.
building the equity and the appreciation, and you're locking in a payment.
Right.
Rent, you're not locking in, so it's definitely the advantage over renting.
And that locking in is huge because so many times when your lease is up, it's your payment's going to be going
That's
up.
right. Or there's a lot of people call me panicked. We just found out our landlord's going to sell. We have to get out, and they have no notice. We've got 30 days or whatever. So you have no control. That's the biggest thing.
Right. And you all serve all of Colorado, correct?
We actually serve all of the whole country because with
okay.
that bank backing, we and our FDIC, we can lend in any state. There's 2 states and actually we did just get New York, but we haven't been there very long. We're in Hawaii. We're everywhere. So all over Colorado, definitely, but we're also national.
Okay.
And I would say every month I usually have a loan or two in some other state, Florida, California, Arizona, whether it's a second home or their kid's going to go away to college and they want to buy a property for their kids, the kid to live in, and then they're going to rent it to the friends so that their housing becomes free, things like that. So somehow just through the people that we know, we're always doing. He got a call today from somebody in Minnesota. He goes, "How'd you find me?" She said, "Google." It's so funny that he popped up for someone in Minnesota.
It was in Minneapolis. I thought that's our home. That's where our home bank. That's where we're based. I thought somebody from the home office told her to call me. She's like, "No, I just was looking and I saw your stuff online. You seem like you knew what you were talking about. And I'm like, okay, like
That's
talk to
great.
her
Well,
daughter.
I
It's
do,
like, wow, how did you,
yeah.
how in the world did you find me?
That's
So-
good SEO right there.
Yeah, right? I know.
It's all those videos, all those testimonial videos. We both have a ton of videos, and that does help your SEO.
I mean, we
And lots
still
of
are,
reviews, lots of good
yeah,
Google
we
reviews.
try really hard. But we have, I mean, we're still focused on Colorado, right? I mean, this is our home turf. This is where we live. We may not be natives, but we still like it here.
I appreciate that.
Okay, yeah, you're welcome.
Just
They
take
let
care of
us
my
stay.
state.
But it is funny, like now that we can do this bank stuff for the last couple of years, stuff just comes out of the woodwork. You're like, oh, my mom needs help in Naples, Florida. Like, yeah, we can do it.
Yeah.
Right.
Right.
That's
So
nice. You
it's-
have a
it's
wide
kinda nice.
reach.
Yeah.
Well, we're wrapping up here, but I know you guys are really involved in the community. I wanted to make sure we touched on that. I know you're involved in some chambers of commerce. You're very involved in philanthropic work. Tell us a little bit about those circles that you roam around in.
Wow. Okay. And they change, they change. Sometimes we're with something for a few years. Right now we're really involved. Well, South Metro Chamber has been a newer chamber from us. We came from Douglas County Chamber for many years, probably 10 years or so. We were over there. But we're loving South Metro Chamber. It's just such a fun group, really dynamic, so many events. A lot of charity. We've done things for the veterans. We've done big in our church. Tim does a lot with the church as well, some mission trips and things. But a lot of times we've just done some other just fun things that maybe it's a one-off. We did the building sleep in heavenly peace, the beds. So we went and build bunk beds for kids that don't have beds. We've done, packed food for Backpack Society. We try to do a lot of different things. But things that touch the hearts of either us or our team, whoever is in our staff. But we're always open. And so if there's something good out there that if somebody needs help with a charity or you just want a team to come in, actually hands, boots on the ground, we love to take a day like that and bring our team and just actually go do work. Because then it's team building with us and it just feels good. Yeah. And our guys love that. So we do a lot of that. Tim's in, what other groups? We've been in and out of groups, but I would say right now that's really where we're focusing. We really try not to be in too many things at once because it gets watered down. Mm-hmm. We really want to be able to go deep in with what we're in and really build those relationships. So he's in a BNI. I'm in several networking groups. But in terms of like the community, just really trying to stay local, buy local, shout out our people. When we're in anywhere, I always am big on pictures and tagging that business and really trying to work with our local small business, our community.
That's awesome. Well, thank you for all the involvement. Well, thank you. We're wrapping up here. Is there anything else that you wanted to make sure that we mentioned before we jump off?
Give us a call.
For sure.
Yeah. I mean, I don't know. Is there anything else we want to mention? I would say, there's so much to know about mortgage. And the biggest thing is people, especially our younger buyers, they're so afraid and they do so much research online. Do not get your information solely from TikTok. I will tell you that. I had a client 2 days ago call me and say, Michelle, we've been thinking about this for like a year and a half. We've got our spreadsheets. We've been doing all the research. And I'm thinking, oh my gosh, like that's great. But, I don't want to be my own physician. Okay. Go to the professional. Get the advice. So just call and have a conversation. If it's not the right time, that's okay. But let us help you figure out if it is or isn't with real data and facts that we're going to provide to you. And get your questions answered from a professional, not just TikTok. I'm sure there's some good TikTok info out there, but it's so much better to really, a lot of times these younger buyers, especially, they do so much research on their own and they're just so nervous. And they go through the process and we get to the closing and they're like, this was so much easier. We're so happy we found you. This was so great. That's what makes us happy. Mm-hmm. So that I would leave people with that. Don't try to get yourself so ready before you ever call us. Like, just call us. Let's figure it out. Yeah. Even if your credit's not great, we can help you figure out how to fix it. If your income's not where it needs to be, we can give you a plan to get there. But just trying to get yourself so fixed up before you ever call, like you're wasting so much time on building equity and appreciation and not throwing rent away. And all those things.
Because everybody's nervous about that, right? I mean, they're going to try to sell me something I don't need or not. It's like not all mortgage people are built the same way, right?
Right, yeah.
And reverse mortgage especially has a bad rap, with a lot of folks. So it's like get the facts, get educated, talk to us. We want to give you the information and pass on that thing and make sure it is right. And if it is, we'd love to help you. And if it's right, we want to be the people to help you, period.
Yeah, and our longevity, I think, speaks for itself. Like you said, doing this for 30 years, doing this for 20-some years, being in this community that whole time, there's a reason we're still here and we still work with clients we've worked with for years. It's because we really do care about what we do. So that's what I'd want to leave people with. It's about the heart of it, and we'd love to help you.
And definitely follow them as they do a lot of videos too. So a lot of educational stuff. I love the educational piece on that. So and leave do-it-yourself to Home Depot.
That's right.
Not researching mortgages and finance. Don't go to TikTok. So, yeah. Well, thank you very much.
Yeah.
We really appreciate you guys coming in.
Hey, thanks you guys. It was
Thank
a lot
you.
of fun. We
So
appreciate
fun.
it.
Thank you.
You
Thanks
guys
for
are
letting us be
so
here.
fun.
Oh,
Yeah.
good. Well,
Yeah.
we try to keep it very, very fun and
Yeah.
casual and informative. So thank you for everyone listening. We've had Michelle and Tim Oddo here. And to get in touch with Michelle is 303-961-6906. You can text or call her. You can also email her at michelle.oddo, that's ODDO, at goluminate.com. And then Tim's cell phone is 303-233-4500. Nice phone number, by the way. It can also text or call. You snaked that one in there. You can email him at tim.oddo, O-D-D-O, at goluminate.com, which is very cool. So the Oddo Group with Luminate Bank for all of your mortgage and lending needs. They are the absolute experts. I love how long you guys have been doing this. You've seen it all.
Yeah, go to the experts, exactly. Thank you very much for tuning in. You're going to have some rock music here up until 7 o'clock. From 7 to 8, of course, you have one solid hour of only Colorado artists. A nice little melting pot of all different genres. You've been listening to K4CO Radio, interviewing the Oddo Group. Everybody take care and having a great evening.